President Trump says there are no imminent plans to sanction China over its purchases of Russian oil, but will reconsider that option in 2 to 3 weeks. This after his landmark summit with Russian President Vladimir Putin in Alaska on Friday. Maria spoke with South Carolina Senator Lindsey Graham about this on Sunday Morning Futures. Watch.
He came to Alaska because Trump threatened to put a 50% tariff on India for buying Russian oil and gas. What's the weakness of Russia? Almost all of their income comes from oil and gas sales. If we went after the customers of Russia and said you had to pick between the American economy and buying cheap Russian oil or gas, they would pick the American economy. So here's what I would say about President Trump. He's the only guy that can do this. And my advice to President Trump and Marco is if you got to convince Putin that if this war doesn't end justly and honorably, with Ukraine making concessions also, we're going to destroy the Russian economy. We have the ability to do it. To Europe, why don't you put tariffs on India for buying Russian oil? To Europe, why don't you threaten China with tariffs for being the largest purchaser of Russian oil? To Europe, you can do more. If Europe and the United States banded together and we told Russia that if this war does not come to an end, we're going to destroy your fossil fuel economy.
And a new Fox digital op-ed making the case, quote, Trump's Russia play isn't about Ukraine, it's about China. It reads in part, Russia today is the weak link in Beijing's strategy. Moscow's dependence on Chinese capital markets and diplomatic cover has grown dramatically. Trump's aim is to pry the axis apart. There's also growing worry about India and China's relations beginning to thaw even after the extension of the tariff pause between Washington and Beijing. I want to bring in Gatestone Institute senior fellow Gordon Chang. Gordon, your reaction to that, that Trump's Russia play isn't about Ukraine. This really is about China, and that it is China and India that is keeping the Russian economy strong.
Well, certainly, China and India are buying Russian oil in large quantities. They're keeping the war going. And it was right for President Trump to impose the 25% tariff on India on August 6th. But he also needs to cut off the flow of cash from China because China is the bigger purchaser of Russian oil. You do that, it means no war in Ukraine eventually, because that's where Putin is getting the resources. You know, for the policy of trying to split Russia from China, that sounds nice, but I think that it's impractical. Vladimir Putin and Xi Jinping see the world in the same terms. They've been partners for more than a decade. They identify the same enemy, which is the United States. And so, yes, maybe it's theoretically possible to pry the Russians away, but as a practical matter, it's extremely difficult. In Trump's first term, he tried to pry away North Korea from China. That didn't work either. I don't think this will work.
And now you've got North Korea, sending troops to Vladimir Putin. And in the middle of this is also this conversation about whether or not this fall there's going to be a meeting between President Trump and Xi Jinping. How does that component play out in your mind, Gordon?
Yeah, I don't think that we should be meeting Xi Jinping, especially with the relations the way they are right now with China. I think it's important for President Trump to impose those tariffs on China for the purchase of Russian oil because it's really unfair. I mean, and India has been a friend and a partner of the United States, and we're aggravating them. Now, I don't think that we can drive India into China's arms because China is, in fact, trying to break apart India, and we've been helping India defend itself. But nonetheless, this is not a good look for the United States. And so until we can sort out a lot of things, especially trade, I don't think that we should be meeting the Chinese.
What about the Chinese economy? Because the data shows that it slowed down substantially for the month of July. Beijing officials say it's on our shoulders. They say it's U.S. protectionism. Economists claim that there's a lot more going on. A 4-year-long real estate value crash in China. And then, of course, these new policies aimed at slowing factory production because they're not getting the orders from the United States. And then there's a new Bloomberg story out that says China's $11 trillion stock market is a headache for both Xi and Trump. And it reads in part the poor long-term performance of the nation's equities has hampered consumer spending. Gordon, what really is happening with the Chinese economy?
The real problem is that communism favors production over consumption. And what we have seen right now is that the consumer economy, which accounts for maybe, 38, 39, 40% of China's GDP, is just not able to sustain China. So it's a structural flaw. Yes, President Trump's tariffs have hurt at the margins, but that's not the real issue. The story is you look at the July numbers, and the one that is really the most troubling for Beijing is the drop in demand for bank loans, which means that companies don't see a future use for money. And so they're not borrowing. Banks don't want to lend. China is trying to use the bond market to compensate for this. But this is really a failure of the economy as a whole. And when you add in the price numbers, which shows deflation is continuing, this is a structural problem. This is the problem of communist economics. And it's going to get worse until Xi Jinping decides that he is going to try to make consumption the basis of the Chinese economy. But we know he doesn't want to do that for a lot of reasons, because that would offend, for instance, Communist Party core constituencies, which he desperately needs right now as he's struggling with other leaders for power and influence.
Yeah, because he's under pressure, and he is reportedly had been very weakened. In particular, not even running the Chinese military right now. We've seen those reports. At the same time, you know, I can't help but wonder if, based on what you're saying, if that makes the trade negotiations between the U.S. and China even more important, not just for him, but for the entire country. We can't, if we go back to 145%, that sinks them even more, to put it in layman's terms.
Yeah, when you look at it arithmetically, if you're not going to have consumption as the basis of the economy, you've got to sell to the rest of the world, and that's Xi Jinping's only plan right now. And the United States accounts for, 34% of global consumer spending. It's a market which is indispensable for any country that has an export-dominated economy. And China is more export-dependent now than it's been maybe in its entire history. So right now, yes, this is a very critical matter for the Chinese. And it's not just us. It's Europe. You see other countries. They are moving away from China as well. So that means that there is no solution for Xi Jinping to rescue an economy which is failing badly.
An isolated China is a weak China. There you go. Gordon Chang, it's always great to speak with you. Thank you so much for being here this morning.
Thank you, Cheryl.